Hey everyone, welcome back to Corporate Decoder. Today, INVO Fertility Incorporated just filed a very significant Form 8K announcing a new stock sale program and other major developments, and I'm seeing some potential fireworks ahead. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals how INVO Fertility plans to raise significant capital through a stock sale program and what that might mean for existing shareholders. So INVO Fertility Incorporated, known by its stock ticker IVF, is a company in the healthcare space, specifically focused on fertility treatments and devices. They recently filed this Form 8K, which is a report for major corporate events that investors need to know about quickly. This filing is all about a new agreement they've made called an Any Market Purchase Agreement with a company called Alumni Capital LP, essentially. INVO Fertility can sell its shares of common stock to Alumni Capital over time. This agreement allows INVO Fertility to sell up to $15 million worth of its stock. That amount can even be increased to a maximum of $50 million if both INVO Fertility and Alumni Capital agree. The key thing here is that INVO Fertility controls when and how much stock it sells. They are not forced to sell anything, and they plan to use the money to expand their business by acquiring fertility clinics and for general company operations. For this program to really kick off, INVO Fertility has to get a registration statement it filed with the SEC declared effective. Think of this as getting the government agency's official okay to sell these shares. Once that is done, INVO Fertility can tell Alumni Capital to start buying shares. Now, here is where it gets interesting for how they will price these sales. INVO Fertility has a few options they can sell shares at a discount. For example, they can set the price at 94% of the average price over the last 5 days, or even 97% of the previous day's lowest traded price. There is also an option where they can sell at 85% of the average price over the last 5 days if the stock is not trading on a major market. This indicates a clear intention to sell shares at a discount, which is something shareholders should watch closely as it can dilute the value of their existing holdings. There is a limit on how many shares they can issue under this agreement without further shareholder approval. Initially, it's capped at about 19.99% of the outstanding shares. However, the filing also states that INVO Fertility stockholders actually approved issuing more shares than this limit on July 23rd, 2026. This is a pretty big deal. It means the company is clearing the path to potentially issue a lot more stock than originally planned. To raise also a restriction, INVO Fertility cannot sell shares if it would cause Alumni Capital to own more than 9.99% of the company's outstanding stock. This is a common practice to avoid certain regulatory issues for the investor. INVO Fertility also has to pay Alumni Capital a commitment fee. This fee is 1% of the total committed amount, which is $15 million. They can pay this fee either in cash or by issuing more shares of stock. If they increase the total commitment amount, they will pay an additional 1% fee on that increased amount. The exact amount of money INVO Fertility will actually get from this program depends on how often and at what prices they decide to sell shares. They are planning to use any proceeds for developing their products, general business needs, and other expenses. This agreement is set to last until June 30th, 2028, or until the total amount of $15 million has been purchased, or if the stock stops trading on a major market, or in case of bankruptcy. This section basically says that the information we just talked about regarding the purchase agreement is also relevant here. It confirms that this is a way they are selling equity securities. This part is quite important. On July 23rd, 2026, INVO Fertility stockholders approved a massive increase in the number of authorized shares. They went from 50 million authorized shares to a whopping 250 million authorized shares. This means they've dramatically increased the number of shares they can issue. This directly supports the stock sale program we just discussed, giving them a lot more room to sell shares without needing further authorization. This move is often a precursor to significant dilution. This section details the company's annual meeting of stockholders held on January 23rd, 2026. It lists several proposals that were voted on. One key proposal that relates to our earlier discussion was approving the increase of authorized shares from 50 million to 250 million. The results show that this proposal, the common stock increase proposal, was approved. For this approval, there were 453,950 votes in favor and 249,498 votes against. So while it passed, there was a significant number of opposing votes, which is something to note. They also voted on directors. All 5 nominees for the board of directors were elected. Looking at the vote counts here for Trent Davis, there were 63,956 votes for and 122,585 withheld for the other nominees like Rebecca Messina and Barbara Ryan. The for votes were significantly higher, 171,863 with only 14,678 withheld. This difference in voting patterns for directors might suggest varying levels of shareholder confidence in individual board members. Scroll Proposal 2. Scrape shareholders also approved the appointment of Withum Smith plus Brown, PC, as the company's independent public accountant. This is a standard procedure to make sure their financials are audited correctly. The vote here was overwhelmingly in favour with 673,445 votes. They also approved the issuance of shares related to exercising a warrant. This proposal passed relatively easily with 135,887 votes. For Scroll Proposal 5 Scrape, there was also an approval for an amendment to the company's stock incentive plan. This means they can issue more shares to employees and executives under that plan. It passed with 130,020 votes. For Scroll Proposal 6 Scrape, and then there is Proposal 6, which is the future equity financing proposal. This one covers the possibility of issuing 20% or more of the company's outstanding stock in a future equity financing at prices below market value. This also passed with 139,990 votes supporting it. This is another indicator that the company is preparing for potentially dilutive equity issuances. Scrollatum 9.01 Financial Statements and Exhibits. Scrape this section is basically a list of all the documents attached to this Form 8K filing. The most important ones here are the Certificate of Amendment to increase authorized shares and the Any Market Purchase Agreement itself. Now, let's bring in some external context. INVO Fertility Incorporated, ticker IVF, is a small company with a market cap around $2 million. Their stock price has been extremely volatile, with a 52-week range from $1 to $90.8. They have 40 employees. Recent news shows they've had revenue breakdowns reported, and a headline from Stock Titan on July 24, 2026. The same day as this filing mentioned INVO Fertility lining up this $15 to $50 million stock sale program. We also see they've had some issues with the NASDAQ receiving a delinquency notice for filing violations back in June. And in March, they announced a 1-for-5 reverse stock split, which is usually an attempt to boost a stock price to avoid delisting. So what is the story here? INVO Fertility is facing significant financial challenges as evidenced by the need for a reverse stock split and the volatility in its stock price. With a market cap of only $2 million and a stock that has traded from $1 to over $90 in the last year. Stability is clearly an issue. The new $15 to $50 million stock sale program, coupled with the massive increase in authorized shares from 50 million to 250 million, strongly suggests they are looking to raise a substantial amount of cash. The fact that they can sell shares at a discount, combined with the approval to issue potentially more than 20% of their stock in future financings, points towards a period of significant dilution for existing shareholders. The voting results for the share increase proposal, with a notable number of against votes, indicate that some shareholders are concerned about this dilution. Historically, companies with market caps as small as INVO Fertility's, especially those that engage in these types of discounted stock sales and massive share authorization increases, often face a challenging path. For example, companies that perform reverse splits and then enact similar dilutive equity programs have frequently seen their stock price decline further. A comparable might be a company like Sears, which went through multiple reverse splits and dilutive offerings before its eventual bankruptcy. While INVO Fertility is in the healthcare sector, the financial strategy here feels like a classic attempt to stay afloat by selling equity, which can hurt existing investors. The risk I am watching is the potential for extreme dilution. Without strong revenue growth or a clear path to profitability that justifies these capital raises, extensive share issuance at discounted prices could significantly erode the value of current holdings. Investors who bought in at higher price points, like the $90 plus that was seen in the last year, are particularly at risk given the current low market cap and sales program. What I am actually looking for is to see if INVO Fertility can utilize this capital effectively to achieve sustainable growth and profitability, which has been a challenge given their recent performance and the need for such aggressive financing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.